Boom! What's going on, Investomaniacs? Your boy Knight Rider here, and we're back with another subscriber question coming from Leonardo. He says, I invested £500, $700 or so 2 days ago, not knowing anything about investing. It says I'm at a loss of £35, so I don't know if I should quickly cut my losses so I don't lose too much, or if I should leave it alone for a long time. I have a feeling the stock will spike high if the Cybertruck is a success. By the way, the stock he bought was Tesla. P.S. I am 18 and just thought that my money may be better risked on an investment rather than knowing I'll lose it with buying designer clothes, etc. You're definitely right there. Designer clothes are not a good way to spend your money when your net worth is a couple hundred or £1,000. I understand I bought too high and it was a brash and uneducated move. First of all, Leonardo, congratulations. I am proud of you for putting your money at risk to try to make more money, to try to improve your financial situation, to try to increase your net worth. Most people are too scared to risk their money. They're too scared to lose it. And because they're too scared to invest the money, they're probably never going to have a lot of it, and they're always going to be short on their money, and they probably won't have enough money for retirement or to live an awesome high quality life. So I'm proud of you for putting your money out there, but I know it sucks. I know it's scary, and I know it really hurts when you do lose your first money, as you did. You're down 35 pounds and you start to freak out, and you kind of like, you question yourself and you don't know what to do, and you just, you get tense. You're like, should I sell it? I don't know what to do. So I'll tell you what to do. First of all, as a newer investor, we don't really want to deal with short-term investing. We want to worry more about longer-term investing as a new investor. So, and that's good because you're actually thinking long-term here. You're thinking about the Cybertruck. Well, that's a little bit down the line. So your thesis is currently long-term. So we don't want to pay attention to short-term fluctuations. Now, I don't want to get too much in detail for kind of like a beginner video, but I do feel like I need to have a bit of full disclosure here. There is an exception to this. Okay? People who go around and just say, buy and hold, they're stupid. Okay? They're just not informed investors. They're not professional investors. They don't know what they're doing, okay? You don't buy and hold. That's stupid. You know why? Because your business might go to zero. Your business might go bankrupt. Buying and holding is dumb. But you do want to have longer-term thesis, but you want to do your homework. You want to stay up to date on the stock, and you want to make sure that you still believe in the stock. Now, in most situations, your opinion on the stock shouldn't really change in 2 days. In this situation, it looks like you just got a little bit scared. The stock went down, you're not used to it, you kind of freaked out a little bit. That's okay, you're a new investor, it's going to happen. But understand, this is just random movements in the stock. But, again, I'm trying to get not too complicated by, I want to tell you the exception. The exception is, while you're doing your homework, if there's new information that comes out about the company that changes your mind, then yes, you do want to sell the stock. Okay, now let's say, let's use your example. You think the Cybertruck is going to be a success, and that's why you're in Tesla. Okay, so let's hypothetically say that you woke up tomorrow and there was a new press release from Tesla saying that they're going to cancel the Cybertruck. Well, then in that case, even if theoretically the stock went up that day, you would want to sell your stock because the reason for why you got into the stock in the first place no longer exists. Or if they said it was going to end up being way more expensive or it was going to be delayed or whatever, right? The reason for why you like the stock is no longer valid. So therefore you sell the stock. And that can happen theoretically a minute after you buy it. New information comes out, new headline. The company you bought, bad information, bad headline. Now you can change your opinion. But unless your opinion changes and you still like the company, then you do want to stay in it longer term. All right, now you're saying, where are we? You said you think that you bought it a little bit too high. That's if I had to guess, probably a true statement, but don't feel bad because just the market in general is kind of high, and almost all of the high quality growth stocks right now are a little higher than I personally feel comfortable buying them. I'm looking myself right now to change up my portfolio because the market's just so high and some stocks have just ran so much. So don't worry too much about that. You're trying your best, you're doing what you can, it's okay. And I like the fact that you say, hey, it was a brash and uneducated move. You are questioning your decisions. And this is very healthy as a new investor. As a new investor, you don't know what you're doing. You're going to be making mistakes. So it's important, it is vital to your success that you question your decisions because you're probably going to be making some bad ones because you don't know the correct answer yet because you are not knowledgeable about the stock market yet. So it's healthy. I like that you're seeing that you're questioning and you're doubting your decisions, and that's going to force you. Doubting your decision is going to make you go back and do more research. It's going to make you learn more about the stock market and how it works. So this is actually very healthy. I'm proud of you for that. Now, whether or not you should stay in Tesla or not, I don't really think is as important as it kind of sounds. You didn't explicitly say this, but it kind of sounds like you put all your money in Tesla. And that's what I'm more concerned about, is I want you to have what we call portfolio diversification, which basically means you don't put all your eggs in one basket, especially as a new investor. As a new investor, because as you kind of doubted yourself and you're like, I don't know if I'm making the right decision or not, you want to lower the risk a little bit and you want to pick a couple different stocks so that way it lowers the probability that we're going to make one bad decision that's kind of blow out all of our money. So I would say pick at least 10 stocks and put no more than 10% of your total portfolio, however much money you have to invest, into any individual stock. So here's a list of some stocks that I would recommend for a young investor who's looking for a lot of growth, and that is what you should be looking for as a young investor with your current portfolio amount. You want high growth stocks. You want stocks that have the potential to double or triple within the next couple of years, and these are stocks, particularly the green ones, where they have a lot of growth potential. They're going to be risky, right? Just like Tesla. They're volatile stocks. They move up and down a lot in the short term, and what we have to do as a new investor is we have to weigh how much risk we should be taking with what we call risk tolerance, and that's how much risk we feel comfortable with. So because you said, hey, I just lost 35 pounds in the past 2 days, should I sell the stock? That tells me that you don't currently feel very comfortable with risk tolerance. And that's completely understandable. That's how almost every single new investor feels, right? Because you don't know if you're actually making the correct decision or not. So therefore, you question the decision as soon as it goes against you. But this tells me that you probably don't have a high amount of risk tolerance at this point in time, which would lead me to say, maybe go a little bit more on the conservative side, even though mathematically you do want to be on the extreme aggressive side with your current age and portfolio size in terms of how much money you have to work with. I don't know if it's necessarily the best emotional decision for you. And it is not a good decision. Let's say, okay, how can I say this? Let's say that you're supposed to take this amount of risk, but the amount of risk you feel comfortable with is this amount of risk, but you still do take this amount of risk. What happens is because the volatility, meaning your portfolio will go up and down, including down, it's on the downside, that's when it's going to kill you. When the stock goes down, when your portfolio value goes down and you lose too much money, you're going to freak out because you don't feel comfortable losing that much money, at least not yet. You will increase your risk tolerance over time. It just takes time, and you're starting very young. That's the good thing. So you're 18, and by the time you're my age, by the time you're 30, you're going to feel so comfortable with risk. It's going to be a walk in the park. But for now, try to figure out how comfortable you are with risk, and then try to construct a portfolio that is appropriate for that amount of risk. So as kind of like a very easy generalization, here's what I would say. If you want to take a lot of risk and you think that you can handle a lot of risk, then I would look for 10 relatively high risk growth stocks, which are going to be kind of like these ones in the green. Tesla is another one of them. And just do that. 10% of your portfolio value in each of those 10 stocks. If you think to yourself, well, I kind of didn't really feel comfortable losing this 25 or 35 pounds, therefore maybe I should cool it down a little bit, then in that case, maybe put 50% of your money in what we call an index fund, like an S&P 5 tracking index fund. It would be, you would search for the SPY. That's the ticker symbol. That's what it's called. And maybe put 50% of your money in the SPY. And then do the same thing that I said before. Pick 10 stocks, but this time only put 5% of your total investing amount that you have into each of those stocks. So it would be 50% in the market and then 5%, 5%, 5%, etc. for whatever 10 stocks you choose. And that way you're not gonna be risking quite as much, and you're less liable to do something silly like sell out just because you're losing a little bit of money, right? That's the main reason, or not be able to sleep. That's another thing. I mean, if you're taking too much risk for how much you feel comfortable with, you're just always going to be thinking about what are my stocks doing? What are my stocks doing? And the fact of the matter is, although it's very important and good that you are investing at this young age with a couple £100, it's more important that you focus on like working, building a business, doing something that can give you a little bit more starting capital to grow your portfolio. So what you're doing right now is more for learning purposes. You're probably not going to, become a multi-millionaire off of $500, but what you are learning with the £500, what you're learning is going to teach you the skills to where over the years, every month, when you can put a little bit more in, a little bit more in, a little bit more in, and you grow that seed capital a little bit, you're already going to be so dang good at investing. And that is when you're going to be able to grow it over a longer period of time into a substantial sum of money to where you may not need to work anymore. Anyway, that's my two cents. I hope you guys have a great day. Peace.